Welcome, everyone. You're listening to Nephology, the podcast dedicated to crypto, accounting, business, finance, and much, much more. I'm Joe David, the founder of Nephos Group in Minor. Please note that all conversations recorded are professional opinions, and if you'd like to know more or gain support, please reach out to the team directly. Now, on to the next episode.
Hello and welcome to a Nephology podcast. I'm your host for today, Jamie Nuttall. I am the crypto tech specialist for Minor, part of the Nephos Group. Today we're recording episode 2 of our mini-series with Robin Thatcher from By the Book Accountancy, who has joined us now for a second time to talk about all things crypto and taxation. Robin, apologies, is it accountants or accountancy?
Accountancy, so it's By the Book Accountancy.
Nailed it, first time, every time. How's everything going, Robin? All good?
Really good today, mate. What about you?
Same as usual. Always crypto, always tax, always busy.
100%. I know you and I both have been at the office for a while, so coming back in today, baptism of fire, million emails, million messages, but I wouldn't have it any other way.
And we're sitting here having a chat for a podcast instead of getting on with actual work. It'll be fine.
Don't tell my clients.
By the time they listen to this, you'd have dealt with them anyway.
Exactly.
So, in episode 2, we're going to be discussing more around the accountancy solutions, if you like, and then the problems that arise from it within the realm of crypto accountancy and taxation. Episode 1 was a bit more chilled, a bit more about you and I, a bit more about the basic, is it taxable, for example? We know it is now, so how do we deal with this? So I suppose the first opening generic question I've got for you, Robin, is so how do you account for it? Like, where do you start? What?
So my opinion on this, and I'll always caveat everything. I work on my own, so I can be quite isolated, and I have to find my own way. My way of working with things would always start with software. I use different softwares, but generally speaking, I lean towards one more than the rest. I'm not going to mention it because I'm not here to promote anything, but I do use one more than the rest. The reason for that is there's no upfront fees, and actually the way I find that helps is a client can put all their transactions in one place, give me access, and I'm not telling them to pay for a software that might not work for them, which has been one of my bugbears.
So flexibility is quite important to you then, to be able to flex between softwares where necessary?
Yeah, so if I'm speaking to a client and they ask me, I always say an API code can only do what it's told to do, and if it's not considered something or a project or anything, a certain way of doing things, it only does what it's told to do, so it won't necessarily be right. So it gives us a starting point, and if that starting point is 95% complete, then we've both saved time and money, and that's key. If that starting point's only 50%, it's still 50%, and it's still time and money saved. If you give me a load of CSV exports and you say how much is this going to cost, it's going to cost a small fortune in time and days. So I like that from that starting point of view. The other starting point I'd say for a client, if they're asking me, is I'd always say have an idea in your mind of where you expect to end up, because if you don't, I'm never going to know. I can't get to the right point if I don't know what the right point is. I've literally had clients that say they've got no idea, and if you come to me and say I've got no idea, and a piece of software tells us you've made 100 grand, but you only think you've made a few grand, if you don't tell me that, I won't know it's totally wrong, and I won't know where to start looking.
Every little helps at this sort of juvenile stage for the software. I guess it's not perfect, is it?
No, and ballparks help, because I know if I'm in the right ballpark. It might be that software isn't adequate for what we're doing, but we'll only know that if we know the ballpark we're going to. So that's where I generally start. Once everything's in there, and I mean everything, the amount of people that do forget wallets or exchanges or things like that, we need everything in there.
Yeah.
Then that's
how little or irrelevant you think it is, guys. Please include it in your within your software.
Well, the way I word it as well, Jamie, is I'll say to someone, it's like a storybook. And if the software is missing a page of that story, it can't tell you the full story, and then it'll get it wrong. And the example I'll use is if a wallet's missing, when you send something somewhere, even if it only touches that wallet and then goes somewhere else, that middle part is missing for the code. And the code can only do what we tell it to. And if it can't tell the story, it assumes it's something else because it'll say you've sent it somewhere else. It must be a cost, or it must be you paying for something or buying a new coin. So it needs all of that. So no matter how irrelevant it is, and you've probably had the same as me, I have no end of clients who say, oh, I haven't put that in because I only send money there to send it somewhere else. That's fine, but then we can't guarantee the software is going to be correct because it doesn't know what's happening. It can't follow the trail.
Yeah, the software does exactly that, where it it won't know it's your wallet until you tell it's your wallet and you have it included. So what that means is if I send my Bitcoin to a wallet address that isn't mine, it's a disposal. It could be yours. It could be someone. So you create a disposal which could create a gain or a loss incorrectly at that point, because technically you're just moving it, say, from your checkings to your savings account. That's all you're really doing. The way I like to think about the software is it's like Zero. Yeah, Zero is a traditional accountancy software for our listeners, where it's quite popular. It's a cloud-based solution. You don't need it, but it helps a lot. It cuts your costs, it cuts down the time, and it really helps. And that's the same with crypto software, I find.
Definitely. Other softwares are available, or do you use QuickBooks in case people ask?
Yeah, so I mentioned Zero because it's one of the popular ones, but yeah,
No, that was me. That was me just joking around, mate. Because I use QuickBooks, there's a big rivalry between the two. So it's sort of like I like QuickBooks for my own reasons, but they're much of a muchness. They're exactly the same thing. But
to be perfectly honest with you, me personally, I don't like either of them.
Really? Well, it depends.
I'm a tax technician. I
was going to say it depends on your background, really, doesn't it? Because I very much I've used Sage, I've used all sorts, but for small businesses, I think they suit what we're looking for, but that they do much of the same thing, and it is purely personal preference. I was just being a bit facetious because I was on the phone to QuickBooks this morning. That's why. Yeah.
We should tag them in the posts and see them both kick off. So yeah, much like that with the crypto space, I suppose there's lots of different types of software. I know you have your preferences, so do we. But the sort of top few, which are mentioned a lot around my space at least, are the likes of Coinly, Crypto Tax Calculator, a Cointing, Recap, which I believe is a UK one, Coin Tracker, and there's probably a dozen more. But these are the ones I tend to hear about in the space people are using before or after us anyway, I guess. Is there anything that listeners need to know in terms of picking the right software? What sort of things are they looking for?
So you're looking for me, you're looking for one that suits the type of activity that you've had. So within those, there will be different ones that advertise that they specialize in different things. Again, I don't want to go into that because I don't want to promote specific softwares. But there are ones that, for NFTs might be more suited towards the NFT market, which is important because, I personally think NFTs get forgotten about in the whole crypto space as a whole. They are crypto assets, and we have a lot of people, I'm sure you're the same, that are specialist NFT investors, and there is no one size fits all formula for it. So if you go out there, look at the different types of things they specialize in. Some of them do advertise these sorts of things, and that's key because that means they're almost there to try and build a market in there, and it also means they might react a lot quicker if you have an issue with that certain asset type. So,
that's a good point. Yeah, I've never even thought about that. That if they're priding themselves on NFTs, they're probably going to be able to at least try to fix those issues because it's what they're advertising they're good at.
I've known tax softwares fix issues within certain, niches within 48 hours when I know it's been a specific goal of theirs. Whereas I've known other softwares be a lot slower to react. And obviously, when your head's in that place where you're trying to do your taxes or keep on top of them, a couple of days can be a long time to suddenly go out of it and then go all the way back in. So yeah, definitely they're the sort of considerations I'd have when choosing. But I have no doubt we're going to talk about accountants and selecting accountants, but I would also speak to your accountant about the one they're most comfortable with using, because There may be a reason that I don't know, that Jamie doesn't know if you use someone else, that they have not a relationship. They might have a reason for using a certain software. They might know something that I don't, that Jamie doesn't. And I'm not the sort of person that thinks I'm the smartest person in the room by a long way. I'm happy to learn off anyone. So go and speak to your accountant and ask their advice as well.
Yeah, definitely, definitely. And if for our listeners, if you didn't listen to our first episode or you haven't clocked on yet, Robin is a the managing director of his own business, By the Books Accountancy. So he is an accountant who would you say you specialize in crypto or you have crypto clients? How would you phrase it?
I would say I specialize in crypto. So if you were to ask me the bulk of my business, there's three areas. There's e-commerce, there's property, and then there's crypto. And they're the three areas. Not only that so e-commerce is because I've had so much experience in it. Property and crypto are my two personal passions. So, you give me something in property or crypto that I don't know, I go and find it, and that really helps. So yeah, I'd say I specialize in it because, like I say, I'm never the sort of person that thinks I'm the smartest person in the room. But at the same time, I do think I'm in the top few percent of accountants in the UK in terms of crypto knowledge. So definitely.
Absolutely. I know you, me, Joe, and a couple of others had a chat going on where we just bounced ideas off early days, about 18 months ago, and it was really helpful for everyone, I think. So speaking of, bouncing ideas off each other, I suppose the reason why we did that is because there was no guidance like loan legislation for quite some time around the crypto space. So I just want to talk about the guidance that is out at the moment and whether it's appropriate, whether it's not, what's going on with that. It's the DeFi guidance in specific that came out over a year ago, I believe. I just want to know what your opinion is on that and any comments on that, really.
And this is my diplomatic opinion. It was written by someone that's never touched crypto before and was getting paid a lot of money. So
yeah,
I would say a big four accounting firm. We all in finance. We all know that if you're going for consultancy, you're going to go to the big four if you're a big business, which HMRC would be. They've probably gone to one of the big four. They've got a consultant that's come in and written some guidance for them. They've paid a lot of money for, and that person has never really understood beyond Bitcoin probably what crypto is and how it works.
I think a lot of people would agree from a crypto perspective because you read it, and again, if you guys haven't read it, you can look up HMRC UK DeFi guidance, and it will pop up very quickly. Just have a read, and it doesn't quite sit right, and it's probably where you and your accountant might have had some arguments, if you like, about the treatment of it. So your accountant's looking at going, "Oh, this is why," and you've gone, "Oh, actually, that's not quite right." So, for example, this particular DeFi guidance talks about how if you're in a DeFi protocol staking, for example, upon entering the DeFi protocol, it could be deemed as a disposal, like your capital injection into the DeFi protocol. So for most of us who think about this in layman's terms, we go, I've got an asset, let's say it's fiat, I've then put it up for another entity to use, and they've given me additional back on top of what I've already given them in terms of a borrowing. That's interest, right? That's fundamentally interest. Now, if we're doing the same thing in the crypto space, why is there a disposal upon entering this protocol? And there's a big issue about the logistics of it, and we're quite strong as a firm to say, well, unless the contracts say you lose beneficial ownership, we're probably not going to adhere to that particular guidance because it doesn't apply. So it's quite a problem with that, really. I mean, have you had anything like that before, Robin? Or
Now ultimately I can't take credit for my approach. As I always say, I don't think I'm the smartest person in the room. I spoke to Joe about this when it came out. I spoke to you as well, Jamie. And I very much was led by the opinions of other people because I had my own opinion that it didn't work. And when you're speaking with other industry leaders who are telling you that they're in the exact same opinion and they don't feel it's enforceable, I'm totally comfortable with taking the same approach. The key is the words that you've said there: beneficial ownership. It doesn't change. It's not a disposal, and I don't understand why it is a disposal. And that being enforced seems impossible to me because you cannot demonstrate that anything has changed. So therefore, a disposal event hasn't happened.
yeah, and it's not an easy topic to comment on, but I think with the call for evidence that HMRC came out with a few months, must have been about 6 or 7 months ago now. It's a while. It shows that they're willing to potentially adapt the guidance anyway. I mean, it's a good step. Many more steps are needed, but it's a good step. Um, there's also something called the CAF, Crypto Asset Reporting Framework, that I wanted to touch upon. So this was commissioned by the I think it was the OECD to generate this crypto asset reporting framework for the G20. Um, I know we had a discussion about this previously, and I just wanted to tie this in very briefly and comment on the fact that this is coming to fruition and could have G20 implications and therefore potentially worldwide implications. With the UK accountancy system, it's very framework and guidance based, whereas Americans have, is it Sarbanes-Oxley?
Yeah.
And that's a very, factual, this is what you want to do. So because ours is a framework and a guidance, I think we can very quickly adapt whatever that reporting framework is. Like I said, I know we only briefly touched into it. It's not really our forte, but any comments on the CAF?
I think it's a step in the right direction. I just think it's with anything crypto related, it's how it's enforced and how it's brought in, and how it's adapted. I look at it compared to IFRS, International Financial Reporting Standards, and UK GAAP and things like that. We have to have some element of that framework for crypto to make it legislatable. I think that's a word. If I haven't just made it up.
What you mean if it's not.
So yeah, it has to be in a way that it turns from guidance to legislation, and the legislation is black and white into what the framework should be. I appreciate there's always variables when you're talking about DeFi, crypto, NFTs as a whole, but I think it's the step in the right direction, that you cannot group this asset class into one asset class of everything. It has to be separated and it has to be treated individually.
So, as a practitioner of all things tax, accountancy, and crypto, what would you say is one of the do you have any generic pitfalls that other accountants or people who do their own personal tax return or accounts need to look out for when it comes to crypto accounting?
If anyone says the words to you, cash in, cash out, run. That's my biggest piece of advice, because the amount of people that come to me and said, my accountant just told me to do cash in versus cash out, I would tell you to run a mile, because that person has just put you up a creek without a paddle. It's a ridiculous statement to make. I understand. I absolutely understand that there are people out there that do not understand crypto. I do not expect every accountant to understand crypto, but hold your hands up and say, I can't advise you. Don't give bad advice, because that's just stupid. And the amount of people that have come to me and said that, it really, really hurts me, because first of all, they've probably paid for something that they shouldn't have. And second of all, they've got to redo what they've already done if they want to be able to sleep at night without looking over their shoulder.
We had someone on a Twitter space, didn't we, who said, was it FIFO, first in, first out, or LIFO, last in, last out? And I think you had a very similar reaction, which in a nutshell was, that's wrong.
It just worries, because if someone came to me, like we've just talked about where I specialize, if someone came to me and said, what about this? And I really didn't know, I would say, look, I can go away and look at it. If you want someone experienced in that, it's not necessarily me. I'm the right person, because I can go away and find out, and I will find out the rules. But if you want someone that's done this a million times, I'm not your man. That's what accountants need to say on crypto, because by saying that you can help someone, you haven't helped them by doing cash in versus cash out. The answer might be somewhere correct by pure luck, but probably not. And it's such a frustrating point, because when people come to me and say, oh, I did a lot of crypto trading, but I made no money, I sort of, in my head, in the nicest possible way, I sort of think, I'll be the judge of that, because you might have made a lot of money and then lost a lot of money, but it depends when and how you did it as to whether you've got tax to pay or not. So
Let me just pause there, Robin, because I know a lot of people are thinking, well, hold on, if I haven't made money, how do you mean I've made money here, not there, and I'm still paying tax? can we just clarify how can someone be in a, because we didn't go this deep in the last session, so I think this episode 2 is a time to, under the topic of pitfalls, really, how can one not find any profits after a couple of years, let's say, but still be in a situation where they owe a ton of tax? Like, how is that even possible? And I know we mentioned it briefly that 2022 tax year was a big year for it.
It's down. Well, first thing, it's down to timing. So you have to know when the tax years are, because if you and last year's a great example. 21, 22, people made money on crypto. We saw the market go up. There was a flurry of DeFi projects that made people money. And ultimately, regardless of what you do with it after, if you've made money, you owe tax at that point. Regardless of what happens after it, you might make a loss. It works out different ways. So the one I always say to people, and I like to use round examples. So if you made 10 grand off a staking, for example, so you've got a ridiculous yield, you've put a large amount of money and you've made 10 grand off that staking. That 10 grand is taxable under income tax, high level. I'm not going to go into too specifics, but 10 grand taxable at income tax. If you're a 40% taxpayer, that income tax is 40%, right? So you've got 4 grand of a tax bill. You take that 10 grand and you invest it in Bitcoin, and Bitcoin falls 60% overnight. You've then got a capital loss, which is separate to income tax. So you've got a 4 grand tax bill on your income tax, and your Bitcoin that was 10 grand is now worth 4 grand. You owe 4 grand of tax regardless. Your capital loss is not offsettable against that. So then you add the two together, you've got nothing, because what you've done is you've reinvested your tax money. So you can end up in a position quite easily, and a lot of people did it in 22, 23, where you can owe tax on a 21, 22 liability, lose the money in 22, 23, and it's not offsettable against prior years. That example was really quick, and I appreciate there's a lot of variables in there, but it's entirely possible. So I think we talked about it before. Keeping on top of where you are in what your gains are and losses are is important.
Absolutely, yeah.
Because it's not down to what you've got in your portfolio or what you've got or not got in your portfolio. It's down to what gains you've liquidated or realized is the right word in the tax year, and that's all that matters for HMRC's perspective.
The amount of people I've seen who have, say, received £100,000, for example, in income for whatever reason. It could be an airdrop, it could be reward stake, and it could be because you performed a service or sold some goods, whatever it might be. You've got income of 100,000. The amount of people I know who haven't put the tax money aside, kept it in crypto, whether it's Bitcoin, ADA, Ethereum, Doge, whatever it is, just kept it in there. It's shot down. They've gone, oh, why do I owe, £40,000? Well, it's because you've got £100,000 worth of income, for example. Let's say it's all 40% to make it easy. You owe £40,000 worth of tax. Oh, but it's shot down now. It's only worth 10 grand. So even if I liquidate my assets, I can't afford it. No, because exactly what you said, Robin. Capital losses cannot be offset against income. And this is where the whole premise of a third regime came from in episode 1. So income tax regime, capital gains tax regime, and why not a digital asset regime?
Yeah, I think the thing I try and do as well is I'll always try and compare it to real world assets. So people seem to think, although people are heavily into crypto, they think it's not the real world, and it is. And ultimately, by making crypto an asset, they treat it as any other tangible asset that you might have. So if I go out and buy a piece of, or buy a house today, and I sell that house in 3 months' time, and I make a 60 grand gain on it, I know I've got to pay tax on that gain. If I then use that 60 grand to buy another house that then suddenly the market value dumps and I don't have that money anymore, I still owe tax on that money. And it's so much easier when you think about physical assets. People wouldn't think twice about it. They'd be like, I've made 60 grand. I know I owe tax on it. But because in crypto, it's so easy to go, right, that's my money. I'm going to put it into the next project. Yeah. They don't think tangibly about what has happened there and about the transactions they're making. Same with your example of income. If you got paid self-employment income, you would know at some point you've got to pay tax on it. You wouldn't just go and invest all that money and put it somewhere and say, right, I'm going to spend it all, because you know at some point you're going to have a tax bill. But with crypto, people seem to forget that. It's partly down to knowledge. But it's also down to, and I'm not trying to insult anyone, it can be down to ignorance because they've just not gone and made the right steps at the right time.
And that's the thing. If you're in crypto, it does not necessarily mean you are a sort of business wise person. Not everyone is business minded. So education, educate yourself, or get an accountant, or both. You know, you can't just sort of wing it and they're just going to go, oh yeah, the business element will take care of itself. You need to be an all rounder, really, or at least find the personnel to help you, whether it's through hiring or getting an accountant involved or whatever it might be. I suppose the other main pitfall I wanted to talk about, which is a very touchy subject, I guess, in certain regards, the idea that a trader within the crypto space is a trader and therefore subject to income tax as opposed to capital gains tax. That I believe can be a big pitfall for many accountants in the determination of whether it's a trade or not.
This is one I've struggled with, and you and I have spoke about it before. So, in terms of I've been an accountant for 15 years, so I've dealt with many different day traders and under the badges of traders we call it. But cryptocurrency is such a different asset class. The main argument I would always have for that is the volatility. So when I invest in a company, the company ethos won't necessarily change overnight. So there might be an earnings call, things might differ slightly, but the overall ethos that I'm investing in won't change overnight. With crypto, it can. A bad bit of news can happen, a dip. The volatility is totally different. I might invest in Bitcoin today, and if it goes up 20% overnight, I might go, well, actually, I'm not going to long-term hold anymore. I'm going to take that 20% because I would think the market will dip again soon, or I'll take that 20% because I'm happy with it. It's such a different asset class that I think personally it's very difficult to put under what the already existing framework, and therefore it means there's a lot more leeway in terms of what is a trader. But I'm not sure. I mean, you might have different opinions at Nefos and Miner on that.
It's very similar. It's very similar. We're with HMRC on this one, that it's very difficult for someone in the crypto space to be considered a trader. Now, the obvious ones would be where the fundamental values of what's going on is of trading nature. It just has a crypto vehicle. For example, if you are a project leader for an NFT project, so you've got an NFT project with a couple of your mates, that is at its very core a business. It just happens to be in the blockchain. It happens to be non-fungible tokens, and it happens to be traded in crypto. But if you look at the very nature of it, it is a trade.
Yeah.
Things like nodes and whatnot is income, so it's slightly different to a trade, but still its very nature is where we'd look at it. In terms of trading tokens and coins and being a general investor and crossing over into that trader mentality and status where you've increased your tax bill potentially from 20% capital gains tax to 45% income tax and national insurance, and maybe even your student loan if you've got that as well, it is quite a jump in terms of taxation and hitting your back pocket. So it is a difficult one. The stance that I currently take is that we would look at the badges of trade, as you've mentioned, Robin. We would absolutely look at that, but we would add one more sort of caveat to that and question. So for any of you listening that are thinking, oh, am I a trader or am I not? I would listen to this here. Determine if your trading has a higher level of sophistication than the average trader. For example, me and Robin, we would buy some, we would sell some, we would hodl, maybe would dabble in some riskier investments in terms of tokens and coins that have just come out. But that's probably it. Do you have an algorithm you're adhering to? Do you have a business plan you're adhering to? Are you adjusting for the markets? Are you learning? Are you using bots? All of those would start to create a picture of, oh, maybe you are trading. Apply that with the badges of trade, and you should be somewhere where you can quite easily determine whether it's a trade or not. I guess that's our stance anyway.
No, I think that makes perfect sense to me. It's not an approach I've heard before, but it's a common sense approach, which I'd be all for. I think it's such an ambiguous question because at the moment I don't think I'd have anyone that would fall under the day trader umbrella for crypto, because I don't think anyone has that level of sophistication as yet within the crypto market. Yes, I've seen bots out there, but I've not seen any profitable ones. If they did, I think it'd be easy. I've seen people who try and use market signals. Me personally, I don't think they necessarily work because I think you're trying to guesstimate. So I personally haven't seen anyone that I feel that would fall under that bracket, but it's a good test to add, definitely.
Yeah, it's a good safety net, I guess. Robin, half an hour has gone so quick. It feels like we've had a 5 minute conversation. I suppose to close off episode 2, could you give us as many or as fewer top tips, if you like, for those in the crypto space wanting to deal with the accountancy and the taxation of it all? Would you mind giving us some?
Yeah, so my first, there's probably 3 main ones. The first one is 2 together, which is get an accountant and then get some software.
Yeah.
I'd always say get an accountant because regardless of what, the advice that you and I can give, for example, is almost priceless because there's not many people that can give it, and it can help you get things right. By getting things right, you're not looking over your shoulder. Okay, that's the first thing.
Peace of mind.
Yeah, peace of mind. And that ties into the software, which is an important decision. I'd seek advice on it to make sure your accountant's comfortable with the software you're using and can navigate around that comfortably. Second would be to keep on top of your software, so bookkeeping. By keeping on top of the bookkeeping, you can keep on top of what your tax liabilities are likely to be. And also you're recognizing a bit more about, we talked earlier about it almost not being a physical asset. You're not seeing the gains. It helps you see the gains and understand the tax that you're going to have to pay. Because if you see a £10,000 gain and then invest it elsewhere, in your head you haven't got £10,000.
Yeah.
So you're thinking, I haven't made that gain. Whereas by physically recognizing that via doing bookkeeping more regularly on your accountancy software, you're aware of what your tax liability might be to start putting that to one side and keeping it. So yeah, that ties in there with keeping the money to one side. And the third one would be tax planning. So we talked there in the software. So you and I, Jamie, have talked many times about this. And, when I'm in the position of looking at my gains and losses, I will consider what options I've got in terms of tax planning. Are there gains or losses that I can realise that might affect my taxes that fall within, and I'm sure we'll go into this at another point, but fall within bed and breakfasting rules?
Oh, Lord, yeah.
Yeah, so that I can do. So can I harvest any of my losses? One of the key ones that I would always consider, or if I was doing investing personally, is there a potential tracker coin that we could move to? So for example, if I've got losses in Bitcoin, can I realize them by moving that Bitcoin into wrapped Bitcoin potentially? Is there a risk in that? Please, not financial advice, but it is wrapped Bitcoin safe for me to hold for 30 days or more in substitute for my Bitcoin to realize the gain and loss? From my perspective, and Jamie will add his 2 pence on the end, I'm sure, but from my perspective, they're different assets, so therefore it's a disposal for tax purposes. However, there's no case law or written guidance that physically talks about that, so it is only speculation at this point, but it is a position I would take personally.
I'd agree. I mean, at the end of the day, if you were to go from Bitcoin to wrap Bitcoin, it's a disposal, and if you were to make a gain, HMRC would expect you to pay your taxes. So what Robin has done is taken a very complicated situation and put it nicely in a nutshell, because he's included tax planning, tax loss harvesting, to the point where he's also managed to not advise, but ask you to contemplate perhaps looking at wrapped tokens and coins for the sole purpose of not necessarily moving your funds out of a particular asset with less chance of being able to move it back in later if you wanted to. It's a very complicated thought process and planning that he's just wrapped in a nutshell for you there. So thank you so much for your insight, Robin. It's been an absolute pleasure once more.
Thanks for having me.
Anytime, and then we'll reconvene for episode 3, our final episode for the mini-series shortly, where we'll be talking about more tax loss harvesting, liquidity pools, negligible value claims, and everything in between, which will be fun. So again, thank you to our listeners for tuning in. Thank you again, Robin, for being part of this, and we will catch you guys soon. Thank you very much, and goodbye.
Thanks, buddy.